LiteFinance, the world of financial freedom.
Hello everybody, it's Monday, November 21st, and naturally it's time to start the market forecast. This week can be slightly less volatile due to Thanksgiving holidays in the US on Thursday and Friday, so second parts of those trading sessions can be a bit lazy, since we don't have any significant macro data publications that could potentially push the markets. So let's discuss the calendar and then we will summarize fundamentals for the US dollar and what can happen on Euro USD. Okay, so we will start from Tuesday, since on Monday there are no major data publications. And so tomorrow we will have only data about retail sales from Canada. Next is Wednesday, which will be packed with the various key data publications, starting from a rate decision from Airbnb very early in the morning. Then PMIs from the UK, core durable goods orders and initial jobless claims from the US. Later that day, we will get preliminary services and manufacturing PMIs from the US, crude oil inventories, and most importantly, FOMC meeting minutes publication. Next, on a Thursday, we will get only CPI from Tokyo agglomeration from Japan, and a couple ECB officials will hold a speech. And to be honest, that's about for this week. So you can see that its trading volume can be squeezed during this week, and most major moves can happen mainly on Tuesday and Wednesday. Okay, now it's time to discuss some fundamentals and prepare some trading plan for Euro USD. First, we must say that hopes that the Fed will trigger a recession with aggressive monetary tightening dominated Forex for most of the 2022. They also contributed to the growth of the USD index to 20-year highs. As soon as the strategy began to falter due to the slowdown in the rate of monetary restrictions and inflation, Euro USD rose sharply, almost reaching 105. However, have prices really peaked? What if this is not the case and the rate ceiling is higher than the 5%? In this case, interest in the US dollar should return. According to Goldman Sachs, the greenback will fluctuate in the future and will not only grow like in 2022, but its dynamics will be positive. The bank's experts predict the trade-weighted USD index to strengthen by 3% in 2023 due to the strong US economy that can avoid a recession, and the fact that other regulators are still following the Fed, since they lag behind in terms of rates levels. The main risks, quote, quote, which are overall a good thing but negative for the price prospect of US dollar in this case, are the earlier opening of the Chinese economy and the unexpected de-escalation of the Russia-Ukraine conflict. But so far, a reversal is not expected. St. Louis Fed President James Bullard said the federal funds rate should rise to at least 5.25%, which is exactly what we were saying previously. And the charts even show a level of 7%. So despite signs of a CPI slowdown, according to Reuters experts, inflation will not return to 2% target before 2025. So it is hard to imagine that prices would decline in 2023 as quickly as they rose in 2022. Experts raised the estimate of the peak rate to 5%. And 16 out of 28 respondents consider that the biggest risk is that it will reach a higher ceiling later than expected. 4 predict an earlier date. The rest forecast a lower ceiling. So Euro USD, unlike stock indexes, believed the hawkish speeches of the FOMC officials. The pair rose despite the S&P 500 fall. Bloomberg's forecast that the ECB wants to slow down the monetary restriction pace, and the biggest tax increase in the UK in a decade, which weakened the pound. The euro has support in the face of warm weather, when gas storage facilities are 95.5% full and gas demand is 71% of the 5-year average. So falling prices reduce recession risks in the Eurozone. However, the first cold snaps will be a real test for the euro. So the Euro USD fate will depend on US inflation. While there are no new data, stick to purchases on the breakout of 104.05 and sales on the retest of support at 1033. And on that note, I will end the video. Thank you guys for watching, and until next time, bye bye.